Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for TV, and today we are catering for the newbie who's just entering the crypto space today. For those who've been with us since 2019, 2020, you may know some of the stuff I'm going to share with you today. I'm talking of how to manage a crypto portfolio during a bull market. We are in a bull market, so how are you going to manage your crypto portfolio? That's what we're going to focus on. We're talking of risk reduction, the ratio that you are going to apply to your portfolio, which assets are going to hold, and what percentages. This is not financial advice, guys. These are just my own opinions on what I think. If you're a newbie, if you want to reduce or mitigate the chances of you losing all your funds, you may want to consider some of these things. This may also apply to those who've been within the space, but they are still not sure where they stand or where their portfolio stands. Because within this market, unless you are in Bitcoin and maybe some of the leading cryptocurrencies, leading layer ones, you cannot stand still. You have to keep yourself on your toes and make sure you make adjustments as you go, because not everything will rise at the same time. That is to be expected, and some things will rise more than others. So if they take a larger proportion of your portfolio at some stage, you are supposed to review that and make adjustments if you have to. Okay, before I jump in again, guys, please know that this content is not targeted at UK audiences. This is just for those from the rest of the world. UK audiences, the authorities are trying to protect you just in case you end up losing your funds. You can do more research around that if you want to understand where that is coming from. So let's come back to us handling and managing our crypto portfolios during a bull market. If we're just coming into the space, or if we are still new, we are not sure where we stand. So we're going to share with you some guides with key strategies and a sample portfolio blueprint to navigate a bull market effectively. Number one, establish your goals and risk tolerance. That might sound like nothing, right? But it's something you do anyway, but you don't know you're doing it, or it does not have a label or a title. So the first thing you got to do, guys, you got to define your financial goals. Are you aiming for short-term gains? Maybe you want to go on holiday, or you want to buy a car quickly. Is that what you're aiming for? Or you're looking for long-term growth or a plan? Long-term growth, you might be looking at, okay, I am going to retire my parents, I'm going to retire my family, I'm going to set my family up and so forth. Is that what you're looking for? And then you also need to assess your risk tolerance. The crypto market can be extremely volatile. Bull markets often entice riskier bets, but be mindful of downside risk. So most people who are claiming to be experts right now is because they gained some confidence for what happened with them in a bull market, but then they also made the right decision maybe to cash out and put some cash on the side. But I still think that does not make someone an expert in certain subject matter. You got some people who've never held a job in the real world, and they are there to give you life advice on how to manage your finances. I always question that. I always believe that the easier it comes, the easier it goes as well. So if someone is made a quick buck here, they are going to lose it at some point, because experience is the best teacher as far as I'm concerned. So maybe they've gained enough experience within the 2 or 3 cycles they've been within this space. Does that experience extend to life experiences? I have no idea. You decide. So the second thing you got to look at as well, guys, is portfolio diversification. Diversifying your investments across different types of crypto assets can reduce risks and capture gains from various market segments. Now, diversification can also be dangerous, because if you overdo it and you don't know what you're doing, you are going to lose everything, because you'll end up panicking because you're not patient and things are not work out as expected. So here's what I would suggest to myself if I was joining the crypto space today. I'll take 40% of my investments and put it in large cap coins. Here I'm focusing on established assets like Bitcoin and Ethereum, which often lead to bull markets and offer relative stability compared to smaller assets. I think Ethereum is overdoing it at the moment. Too stable for my liking. Everything else has been rising, but Ethereum is still over 80% below its previous all-time high. That's crazy, right? I would suggest to myself, of course, and for those who are new here, still trying to come in, consider 25% into BTC and 15% into ETH. Like I said, ETH is too stable at the moment. It's still stable, by the way, but it's too stable for my liking. And then I'll also look at, 40% in those, and then I'll also look at 30% mid-cap altcoins. Mid-cap altcoins tend to grow significantly during bull runs, but have more risk than BTC and ETH. Look at assets with strong use cases, adoption potential, and network activity. Cardano, to an extent, you're talking about community. Then you got the likes of Solana. You also have the likes of maybe Dogecoin, but that's a meme coin. That's not a good investment from my point of view. It's highly inflationary and it doesn't have any fundamentals at all. It's just a meme coin, full stop. And here you also got to look at the likes of Avalanche. Now you've got Ton, consider that as well. And then as you go down the scale, you got the likes of Sui, or the likes of Aptos and the like. So those are some of the things you want to consider when you're looking at the mid-cap altcoins, okay? And then consider 20% into high risk, high reward, small cap altcoins. So small cap coins and newer DeFi projects can yield high returns in bull markets. Consider a few high potential projects with solid fundamentals and liquidity. Suggested allocation here for me will be 5% into maybe 4 small cap projects. Examples could include newer DeFi protocols or layer ones. Here you're talking of the likes of Phantom. What other layer ones can you be going for? You're talking of the likes of maybe Injective. What else? This could be challenging, but you got to be looking at some serious, I call them degens, because even the likes of Phantom is still a degen play. And what most people don't like to consider is leaving some powder in stablecoin, even 10%. For me at the moment, I'm probably working at 23. I think I'm on 23%, but I might not invest all of it anyway. So 23% in stablecoins. So allocate to stablecoins like USDT, USDC, and if you're adventurous, going to the likes of DAI or the equivalent of that. Stablecoins provide quick liquidity to buy dips and are crucial for cashing up when you've got profits to take out without fully exiting the market. Suggested allocation, like I say, 10%. So the next thing you need to be looking at is establishing profit-taking strategy. Taking profits is essential to secure gains, and some of the methods I'll be using for taking profits during this bull run, I'm looking at incremental selling. Gradually sell a small percentage of my holdings, for example, 10 to 20% as prices hit predetermined milestone, for example, 50% or 100% increase. But I'm looking at X's, I'm not looking at those percentages. First and foremost, if something goes too crazy and I look at the volume and market cap, and the volume is going way past its market cap, I sell a portion of it. In most cases, I always go for my initial capital, because when that happens, you know there is going to be a balancing out. It's going to reach an equilibrium or revert where the market cap stays above the volume. Because when you have volume above market cap, it means there is some market making happening, or the project team are doing something to manipulate the price so that they can dump on whoever is coming board. So you've got to be careful of that. So that's one of the things I do. I also that's selling into strength, isn't it? When an asset experiences a sharp price increase or reaches an all-time high, consider selling a portion to lock in your gains. Take profits into stablecoins, convert profits into stablecoins to maintain value without moving entirely out of the market, enabling you to invest if a dip occurs. But there are also risks, because stablecoins sometimes they do dip hack. We had that almost 2 years ago now with USDC, where it dip hacked, and that's always scary. Just imagine you got your stablecoins in a Ledger wallet or Happy wallet. By the time you go there and look, or you find it, some of us, you sleep a certain time, right? You wake up, realize that's what's happening. You go to your Ledger wallet, you go to your PC or whatever device you're using, you go and do. By that time, you probably have lost quite a bit of it, because when these things happen in crypto, they are instant and it's like a cliff. It falls off a cliff. So you've got to be careful about that. Anyway, and for those who are trading and doing all that stuff of trading the charts, use stop losses and trailing stops. Set stop loss orders to sell an asset if it drops to a certain price level. Trailing stops adjust upward as the asset price increases, allowing you to capitalize on gains while protecting against sudden downturn. But then it could be wigged out, get wigged out, and then it goes straight up. So it sells and then it goes straight up, left behind. That's what happens sometimes, because all these things are happening on chain, you see. So the manipulators and those who are looking for liquidity, they know what to do. They know which buttons to press, because they've got the deep pockets. They've got the liquidity to do that. Rebalance regularly. You got to rebalance your portfolio as well. During a bull market, certain assets may grow faster than others, causing your allocation to become skewed. Periodically rebalancing your portfolio, for example, quarterly or after significant gains, in order to align with your initial allocation and risk profile. That's always an important thing to do, like we highlighted at the top of the video. Also consider the tax implications. Understand the tax obligations within your jurisdiction. Taking profits may trigger capital gains tax, so plan accordingly and set aside a portion for tax obligations if applicable. Also stay informed and adapt. Track market news and updates. Stay updated on regulatory changes, network upgrades, and overall market sentiment. Yeah, I've been a victim of certain projects I'd invested in the past, either issuing a new token where you got to do migration within a stipulated time. And recently it happened with World Mobile Token, which went to XWMT, and I could not identify one of my wallets because it was one of the old wallets from Cardano, and that WMT is probably lost. It wasn't a big amount, but it's lost. Yeah, you got to take it like a man. I'm taking it like a man. So you got to adapt to market conditions. So in bull markets, certain sectors like DeFi, NFTs, and layer ones may outperform. Consider reallocating funds to outperforming sectors if fundamentals remain strong. And also, don't forget to cash out and realize gains. Set target amounts for your portfolio value and take profits into fiat or stable coins when you reach them. Consider cashing out in tranches rather than trying to time the peak exactly. If I was new today, obviously I'm playing it totally different. But if I was new today, I will have large cap coins. This is how I allocate a sample portfolio. This is how I allocate it, like I said. 40% large caps like ETH and Bitcoin, so 25 into BTC and 15% in ETH. Mid cap coins, I'll have 10% in ADA. Maybe consider one of the two between SOE and Aptos. I'll probably go for Aptos and then go with Solana, 10%. And then high risk allocations, I'll drop 20%. I'll consider small cap projects. 4 coins at 5%, maybe Injective, Render, Beam, and maybe Lenfi, Cardano or Lenfi protocol. This is just so I played relatively safe, okay? Stablecoin 10%, like I said, USDC and USDT, and maybe others. Anyway, that's how I would play the market, guys. If I were new today and entering the market, how would you play the market? Let us know in the comment section, guys. Until the next one, this is FD for Safe signing out for now. Bye.